Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So today I want to cover off what I would think might be one of the next big trends over the next few years. And it's hard to put money to work for that long a term for me, but I like to look towards some of those growth areas and try to set myself up to be able to find those moves as they start to happen. So today I'm going to pick an example of one of the larger trends and see what you think and show you how I put together some information on StockCharts so that you can build this model and see if it works for you. Okay, so today I'll cover off the current market. I want to get into the artificial intelligence stocks, and I've got a list of those that I've created. I'm also hosting a presentation on what we provide at Osprey on February the 15th at 1 p.m. Eastern, and you could just type this link into your new browser bar on a new tab, and what it would do for you is just take you to a page that looks like this where you can log in for our presentation. The last presentation, I got lots of good comments back. I got over 140 comments back about how much they liked the presentation. So hopefully there's something there for you. And again, there's no pressure here. It's just more to tell you how we work at Osprey Strategic. Let's jump into the charts. So first of all, this is being recorded Tuesday, roughly noon Eastern. And what we see is the market has kind of surged up Thursday, Friday. Fed meeting was Wednesday, so Thursday was the big surge, and then it's been selling off since, and we're just kind of drifting sideways. Really both Monday and Tuesday. So no real price action yet, and we'll just continue to watch that. Now, when we go to the daily, obviously, we've had quite a nice push and off the lows and soared up to the highs. And now we're trying to figure out if we've got enough power to go higher, or do the markets need to trim here? And, there's a lot of talk about this right here. What is this? This is the golden cross, where you get all three moving averages in the right order. So you have the 20-day above the 50-day, above the 200-day. And, in a nice bull market, that looks pretty good. So if we just click on this and go back 3 years, what you can see is when we get this golden cross back in here, where the 20-day is now above the 50-day and above the 200, everything is bullish, and you're in this big large uptrend where these hold, and then you get over to the other side, and we got where the opposite was happening, and now we're back in this uptrend. So everybody wants us to believe that we're in this part of the uptrend and we're just going to go higher for longer here. And I'm not doubting what we're going to do, but I really have trouble with the prediction of, everything's going to work out fine. So when I watch the market here, one of the things I'm watching for, again, we've just come off an earnings period. And one of the things in October, we had earnings into November as well. And we've had this rally for the this period of earnings. Now, Morgan Stanley put out a chart the other day that just shows earnings dropping hard in 2023. Whether or not that will transpire, that's a pretty important question. What we don't know, or what we as technicians don't know, is obviously, is price going to find support and continually go higher here or roll over? And then what's your timeline? If your timeline is 5 years out and you really don't care if you have another 30 or 40% pullback, then it doesn't really matter. If your timeline is more trying to make a staircase of profits higher in your portfolio, then obviously where this market goes over the next 6 months is a much bigger deal. So the bulls are never done bragging about how well this market is going to do, and then the bears obviously aren't going to let their bear position go. I'm much more neutral. I literally will try to follow the charts and see what they offer now. But this push-up that we had off the Fed meeting did feel like a little bit of a euphoric surge, and now we're just trying to see if this can hold. So one of the technical ways to look at this market is if we just take this area in here and we're showing this level as support and resistance, right? So we stalled here before, fell down, came back, tried again. So that becomes resistance. And then we've bounced up through, and now we're trying to hold this as support. And can it continue to go higher, or does this roll over and then start to put pressure? Now, we've got some charts like this that we could use. I'm not going to bother to save this because it isn't really just a very short-term picture. But if we go over to something like the $ NYA, and I'm just going to change the period here to be 0, and then just want to change the width. So I use this feature here called custom in the stock charts. And so one of the problems I have is some of these other automatic settings, if they're right for width, they're not right for height. So for me, I like to have these fine-tuned, and a good number for me is a 1400 by 750. And why is that a good number? Well, I can scroll it up and it just happens to fit the whole page here. So I'm looking specifically at the New York stock market here. And one of the things to just notice, and again, this isn't the whole stock market, but this is the whole of the New York stock market, is we have this trend sitting here. And this is pretty important. If we wanted to use the absolute low from October, we could draw this line, and we've started to crack this uptrend. Now, one thing about a chartist, we always have a new place to draw a line. So anyway, this is a more shallow slope slightly. And let's just say if we could hold it, this would still be important. We also have another place on this chart that we want to talk about, and that's this same idea of horizontal support and resistance that I just showed you on the S&P 500. We have this same thing on the New York Stock Exchange now. And again, this is the composite for all of the stocks on the NYA. So when we look at this market, let me just put this in here. When we look at this market, a couple of things come to mind, and I'm just going to get rid of this scooter ranking because it won't give me a scooter ranking for an index. It'll only give me for an actual stock or an ETF. So here we have this horizontal space, resistance level, and now we're trying to hold right here. And we really, on the entire New York stock market, we really haven't gone anywhere since, the 11th of January. We're back to that level. When we compare that obviously with the Dow or with the NASDAQ 100, we've come a long way since that January point. So it's been I'll call it a tech-focused rally, if you will, or a NASDAQ-focused rally. And as we watch the market kind of absorb the gains that we've had, we really need to make sure that this follows through to the upside. And again, the reason for that, for my concern here, is if one entire stock market is sitting right on its trend line and is about to break down, and the other one still looks fine, does that mean the other one won't break down and it'll just keep going into blue sky? Or do we roll over here? Now, we do usually see the NASDAQ outperform the New York Stock Exchange because there's a lot more biotechs on there, a lot more software companies. But we also have, a lot of stocks like Zoom that ran up and busted, and Peloton that ran up and busted. So with all of these different stocks in there, we can clearly identify the big seven or whatever, Microsoft, Adobe, Apple, Amazon. And so as we're watching these stocks move, what we really need to be aware of here is the disparate situation between the two exchanges. One is doing really, really well, and the other one really hasn't moved since, mid or early January. Quite different. Anyway, the point I want to make here today is that when we're watching the market, don't be so agreeable as to buy on with all the bullish focus out there, but make the charts do the talking. And if the charts are starting to break, just be aware that we're set up here for something similar like we had in August. And again, in August, if we drew a trend line up here, and when that broke, that was a pretty good clue. Well, we had one here, then it broke, and we spent the month of December going down. Now we spent the month of January going up. And sure enough, first day of February has now marked the highs. And, at the end of November, that kind of situation existed, and we fell back down. So I'm not predicting anything. I'm just saying this is an important place to watch on the charts. And I've seen it all. Somebody who's predicting, stocks to fall 40% from here, and we're going a lot higher because some sort of a base breakout from 2009's market top or something, or 2007's market top. Anyway, all different kinds of patterns. My big focus here is staying astutely tuned to what the markets are doing, and as they start to crack, just remember that if we are entering kind of an overall recession situation, eventually these charts will go from bullish to bearish. And we need to have protected our portfolio near the highs. We don't want to wait until we're down near the lows. So anyway, with that said, I still think we've got a positive spectrum here. Some of my internal data is starting to break down, suggesting that profits should be protected here. That market, so if we talk about the S&P 500 and how it has a more balanced portfolio of stocks across all different groups, so the NASDAQ 100 is a little more not just tech, but biotech and that kind of thing, stocks that move more sudden. Let's just call the S&P 500 the in-between the New York Stock Exchange and the NASDAQ. And a broader measure, the bigger stocks sit in this index. So I have all kinds of things that I like about the current setup and a few things I don't. One of the things I'm concerned about here is the PPO momentum is already up near where we rolled over at the end of November. August got up a little bit higher. But just to be sure, we need to stay in tune with how the momentum indicators are rolling. And these were pretty good buy and sell signals. Right here was a sell signal August 19th, a buy signal, well, we kind of bounced in early October. But October 13th, 14th was a really good one. Then you got a sell signal around the end of November. And then you got a buy signal around the beginning of January. And here we sit just watching. So again, not calling the market done with whatever. I'm just saying that the support we had going up has waned significantly, and now we just need to watch what's coming next. Okay, let's get into the artificial intelligence stocks. So one of the questions is, how do you build a list? And for me, I literally just would Google or go onto any search and just say, top 20 AI stocks or something like that. And once you, trying to figure out why that isn't going anywhere. Once you get a list of some of these stocks that you can look at, I think the important thing to keep in mind is the price action is going to be, pretty important for us in order to see the bigger picture. So when we're looking at this, here is the AI Innovation Fund, so WTAI. So if we just go up here to the gallery view, okay, a little technical trouble there. So I've switched over and now I'm on my Google Chrome browser and everything seems to be working fine. So first of all, I was talking about WTAI, and this is a wisdom tree, artificial intelligence and innovation fund, and you could go to the Kathy Woods ARC fund, AR. I can't even remember what the last digit is for that fund, but when you look through these various funds that are trying to invest in artificial intelligence and that stuff, most of them are going to have some heavyweights like Apple, Google, Facebook, Meta, Microsoft, behind the scenes. And then you're also going to come up with a whole bunch of innovative companies. My suggestion is the smaller innovative companies are going to move more, but still we need a list to work with. So just from Googling the top 20 stocks, you can, get a list for this. And, I have a whole bunch of trouble with this sort of things. where the motley fool will just talk about, these stocks, buy them for the next 10 years or whatever. It's just so hard. They said that at the end of 2021, and these stocks have fallen 90%. It's very difficult to make it all the way back to the top. Now, eventually they might do that, but literally having a strategy to buy and hold something for 10 years, is probably going to be more frustrating than anything. So I think it's pretty important to at least be aware of the overall market environment. If we're going to roll down, then maybe it gives you another chance to buy these, closer to the lows than the highs, and that would be a little more helpful. So here in this particular case, let's say this is the left shoulder, this is the head, and we got back down from 18 to 15. That'd be like a 20% pullback. And that would give you the ability to go in and look at or 15% pullback, go in and look at perhaps buying it down there. That's just an idea. And again, I'm just trying to show you how to set things up so that you can do this. So you Google it, you just find some stocks to trade, you make a list. Okay, so I've got a list of stocks. And so let's look through here. Again, I picked a whole bunch of names, and I literally just searched the internet to try and find a whole bunch. But here's one called Global Foundries. The stock has done nothing. So this is a pretty hard stock to own. You bought it in November of 2021 when the Wisdom Tree ETF was getting set up at the same time. Now, this one actually held up much better than a lot of the other ones. So perhaps it finally breaks to, a higher high here and starts to move up. That's the kind of information we're going to try and get. Now, the other thing we want to look at is we want to set up our stocks, and I'm just going to go with a 3-year window on the weekly chart. And then with that, I've got a couple of indicators going here. So I've got my StockCharts technical ranking. And again, what does the technical ranking tell you? It tells you it's like a sports ranking system. So the one with the most wins is at the top, or the one whose price action is best is outperforming. So a stock at 99% on the SCTR is one of the best stocks out there currently, and a stock with an SCTR of 10% is one of the worst stocks out there. So it's really one of the only indicators that kind of ranks the stocks, just as you're looking for them in real time. How is their price working? And so again, this stock has held up for a long period of time. So it's okay. It's just not gone anywhere. Now, if we take some of these other ones, and I'm just going to, well, actually, before I do that, I need to apply the style to all, so they're all on this same sort of weekly chart. Now I'm going to go down here and pick Snow just as an example. And so Snow, when it started to run here, the scooter ranking ran up to above 75. That's the blue line. And then which I like to call top quartile. And it sat up there for 4 months, and then it fell apart. And it's been down here near the lows for most of the year, and again, until it starts outperforming. This is probably a quick clue. So what we can do is we can literally go into our view all or into our summary mode, and from summary mode we can sort these by SCTR ranking. And now what we want to do from there is we want to add a number to the front of these names so that we can keep them in that sort order, and then from there we'll be able to look at the strongest stocks first, and you can just turn these numbers on and off. So now I'm going to scoot to the bottom of the chart list and just say number in sorted order. And so by doing that, now we've got the strongest stocks first. So let's just go in and look at one. But here is ON Semiconductor, and you can see that it had a price sitting here, call it $71 here, $76, $77. It's just starting to break out of the entire base it built in 2022. This looks like a really good name with a really nice breakout, and people are buying the stock as it's breaking out of this base. Now, one thing you'll find is when you go back and look at these base breakouts, so here's an example here, as you get through these base breakouts, the stock can run up meaningfully from there. And for long term, that's probably telling us there's a bigger change in store. If we go to, here's NVIDIA. So NVIDIA now has its base built, let's call it 192, somewhere in there. We're up around 220, and it looks like the stock wants to keep going higher. So you can just use the scooter ranking to at least point you to the strongest stocks first. That's one of the key decisions. And then if we go to the bottom of this list, whatever, CrowdStrike Holdings. So we've got a scooter ranking of almost 0, and the stock is, clearly not one of the strongest ones yet. So there's no real reason to jump at that name just yet. Now, eventually the stock might start to get some momentum. We're about to get a PPO cross here, and perhaps it could turn up and become another leader down the road. But the idea here is to focus on what is working now, and then either the PPO starts to give you a sell signal, or you start to see in relative strength it starts to underperform the S&P 500 or something. You can use those points to determine whether or not you still want to own the stock. And the idea of starting with something working is a lot better. In other words, you're cheering for a team that's already coming out of the chute 1 month after we've made our lows and it's hitting new highs, or you're sitting here in a stock that has pulled down hard. And I wrote an article last week about how these stocks that were the worst 300 of last year have bounced the most in terms of percentage. While that's true, it still makes it very difficult to go and buy these beaten down stocks. And again, if the stock market rolls over, will these beaten down names just roll over again? That's a tough question to answer. But one thing I do like here is when you're starting to see some of these big names up at the top here breaking out to the upside. That's pretty helpful. And so here's STM Microelectronics, and 51 is the prior high. It got up there in November. We're already back at that prior high, and it's trying to break through it. So once you start to break out to a new high, that's pretty bullish. The stock was never really one of the top scooter ranking stocks in the last 3 years. Right now it's pinned up here at a very high level. It's 97.9. So clearly it's had more interest than it's had for a long period of time. And if we compare that to NVIDIA just before, NVIDIA was pasted near the top here for years. We can just extend this out a bit. And you can see it spent a whole year as being one of the top stocks. And, that's a pretty nice looking chart. So just to give yourself a heads up and not waste a whole bunch of time buying beaten down deadbeat stocks, you can also find stocks that their percentage gain and their price action, it's above the 200-day moving average, above the 10-week moving average, whatever. Those strong technical indicators. Starting to see stocks like this, continue to climb is a pretty nice place to look at them on the chart. Now, again, if the whole market rolls over, do these roll over? Yeah, probably. They probably have a pullback even in this big uptrend in here. Stock went from 78 to 45 in 4 weeks. So that doesn't make it easy. That was the COVID period. Here's 153 to 15. So a $40 pullback in a couple of weeks. Lots of reasons to at least be aware of the overall market trend. But I would say if you start with the scooter ranking, at least it's going to point you towards some of the stronger stocks. And then you can investigate the middle of the list and start to see if some of those stocks are breaking out to the upside. Okay, so again, just if you're interested, you could type in this information into the browser bar to come and hear what we have to say about Inspiring Hope. And watch the current market here. I know a lot of people are bullish because the market's been going up. That's cool. What else we need to be aware of, again, is some of the stock market isn't bullish, right? They haven't done anything since mid-January. And so we've got this real collection where we're focused on 3 sectors. And as long as those sectors hold up, maybe the market can continue to go higher. But if it doesn't hold up, we're going to suffer from the other side of it where the market breaks and probably give back all of the gains we made, or some of the gains we've made since January. So just be careful on being overly optimistic here. I still think there's some nice setups, but make sure you're aware of how precarious the market is in terms of, the momentum indicators are starting to roll over for some of these. With that, thanks for taking the time to join me. Have a very good week, and we'll talk to you next week. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.